Hey there, good afternoon everyone. This is Trader Tim from over at eminimind.com, and we're doing a Monday market analysis for the 3rd of August 2020. As we head into kind of the latter portion of the summer, I find it important to think about what kind of trends we might see in the fall. Obviously, right now there's a whole bunch of uncertainty and all kinds of curveballs coming our way. But that in itself could be a trend, uncertainty sticking around. And so in today's video, before we get to some of the minute ES day trade stuff, I just wanted to touch on some of the bigger plays that I'm kind of putting into place. And so the first thing in the short term, like for the month of August, which can be kind of a wacky month, you tend to jump around a little bit. We do have some earnings still, and then it's typically kind of the last hurrah before kids go back to school and folks kind of take their last ditch vacations and then return to the markets, return to their businesses. This being a little bit of an odd year, we should see a little bit more guidance from the Fed in September at their September Fed meeting announcement. Kind of sets the tone for the fall. So we have that coming up in about 6 weeks. We just had the last meeting last week, which wasn't super eventful. But one thing that I'll look to do here, especially since we've made such a strong run up over the past 3-4 months, is to put on some hedges going into the fall. And so as I look at the SPY, and we have some retracements drawn up that we've been trading within, meaning we've touched the 50% here, but we haven't quite reached the target. This line over here at about 335 is it's actually about 330. Let's see, 323. 335. No, that was right. Yeah, 335. And so that is kind of the larger target. Now these two smaller retracements that are sitting within it, that'll make things a little clearer. There's the 335 target. But then on the way to the bigger target, you have these smaller retracements that have traded off of kind of the trend, these little pullbacks. And we're kind of on our way right now to a 330 for this small little target, breaking above the swing high, which is super important. So as we work our way towards the 335, if we back out a little bit and look at, okay, the SPY high, all-time high here, 339, not much further beyond that, I'll be looking for shorting or buying some puts to hedge the long-term positions that I've built up over the course of many years, but also over the course of this bull rally that we've been in. Did a lot of buying, back here when we were kind of in the middle of March. And so rather than some of those longer term positions that are, especially ones that are paying out heavy dividends and reinvesting, putting on some hedges is a really good way to do that. So if you buy puts, what you can do is kind of estimate, if we take from this swing low down here and we pretend like we made it all the way to the negative 23, because that's where I want to be putting on the hedge. I don't want to wait till we sell off, break a swing low, and we're trading down at 310 to get short or to buy puts, because as you move down, you tend to see a rise in the volatility. The VIX jumps, and then your puts are going to be more costly. So what I prefer to do is buy some out-of-the-money puts, sort of targeting the next 50%. So if I just ballpark it here from low to high, that gives us about, we'll call it a 315, just to make things round, even numbers. And so as we move up here in the next, hopefully this week, we can make it a nice jump to 335. Buying something like a 315 put, or even coming down to a 300 if you wanted to go out to like, September, October. You don't want to spend too much. The idea is to create this asymmetric risk where you pay very little money. And so if it goes against you, if the market doesn't go down, it doesn't cost you much, and your longs make a lot of money. If it does go in your favor, you didn't pay very much, but you have a big return. And so 315 is kind of a nice sweet spot. If you buy August, you got about 3 weeks, and that could be a little aggressive, but they're pretty cheap. If you go out to September, October, you might need to drop down a little bit to get that sweet spot of a cheap enough option to where if you have, let's say, $250,000 in your retirement account that you're looking to hedge, you need to buy enough so that yes, your longs might go down, even let's say 10, 20, $30,000 over a 2, 3, 4, 5% pullback, even a 10% pullback. But rather than closing all of that out and trying to buy it back lower, you capitalize by cleaning up on the short side with puts. At least that's the strategy that I've used for a long, long time. It's simple, works pretty well. You don't have to be super pinpoint with your entries and exits, but I do try to put my positions on at the end of the day when we've made a strong push up. So as we approach this 335, you can be, I'll be looking to buy some puts, and the more we go up and have strong market movement with a decline in the VIX, the cheaper those options are going to be. So the idea is to be kind of thinking a few steps ahead and actually putting on the short positions when a lot of people are just chasing the longs, and then they're going to end up getting stopped out and losing money. So 335 is kind of that target. If you want to kind of scale in, you could buy some over the course of the next couple of days if we were to run up. If we go higher through 335 into new highs, then the idea is, okay, the longs just completely take off if we're trading up here at 355, and you pay so little for the hedge that it really doesn't have much impact. A couple other things to think about. Like I said, August can be a little bit of a squirrely month, so be careful with your intraday trading. Looking at the 5-minute chart today, there wasn't really a whole lot. The first long that's set up about an hour, or about just shy of an hour into the day, had a little bit of a bounce and got a retracement here. And I wanted to clarify a couple things from last week's video, where if you look at this move down, now we're kind of getting into some of the granular details of the day trading side of things with the ES. If you look at the move down, if I were to hold my cursor here, the swing low, or the swing high rather, that occurs before the low is all the way up here. And so breaking a swing high on the move down has a little bit more weight than breaking a swing high here that, if you notice, occurs after the low is put in on the move up. So we move higher, we pull back, and we make another push higher that breaks this swing high. It does make for a valid swing high break, and we do pull back to the 50 and trade up to the negative 23, but we don't have quite as much follow through. And so if you were to just trail this trade, you end up stopped out about like 32.86-ish. Well, if you have a position that breaks a swing high, if you're looking to go long, and it does occur on the way down, let's see if I can just scroll. There really weren't a lot of great examples of that today, but something like this, where here's the swing high, and we come down, we make the low, and then we push up, and we break the swing high that occurred just before the swing low. Then when you set up in the long, you get a bit more follow through. Those tend to have a little bit more follow through, like I said, when the swing high is broken before the low is put in, or the swing low is broken, like here, before the high is put in. It has a little bit more emphasis. This one didn't quite make it up to the halfway back, but that's the idea. So getting a little bit detailed on some of the finer points, but it is a question that I get sometimes, like, well, if the swing high is up here, there's no long entry until this breaks. And while that's true, sometimes the market setup is not super clean, and so if you're waiting and waiting and waiting for the perfect setup, then you might just be missing out on a whole bunch of trades. So I'd rather, take a few more trades that might not be perfectly clean and textbook, but at least give me an opportunity to get in. And sometimes those trades that are a little bit sloppy, if you can be patient at the start, end up being the big winners. So yeah, the first long, there wasn't really anything there. Then we came back down into the kind of opening range, but we weren't really able to break lows. And I prefer not to get too aggressive with a trade in the other direction unless we can break the swing low. If we look at the first 30-minute range for today, we spent a fair bit of time this morning kind of within that range, even though we poked above it here. And then once we did break out and broke above this swing high over here, we did get a nice little pullback to the 50%. Notice I'm using the higher low here to the high, and we came awfully close to the 86 here. And we're kind of, we got another half hour to go before we close. So we really haven't gone too far today, at least from our open, mostly sideways, but you can still see within that generally sideways trend some higher highs and higher lows. So finer points to pick out when the market doesn't really seem like it's doing that much. But as we kind of get up into this negative 23% target, start getting up towards these highs, putting on a hedge is not a bad position to be in. Taking directional swing trades is also a great opportunity, but it's hard to find really good longs when the market is breaking out or has already broken out. I prefer to get into my longs when the market is pulled back. So just like I'm looking to get short when the market's up, kind of doing the opposite of what most people would think to do, looking for longs when the market has moved down, finding those strong stocks that have pulled back just with the market, and then you're already in the position when it breaks out. So if you have questions, feel free to put them in the comments below. As well, tomorrow we'll be doing a live trading session, so you can ask your questions there. Follow along as I trade in the morning. You can check that out, eminimind.com/VIP. Thanks everyone, and be well.